UK house prices ended 2016 up 7.2% despite London house prices weakness that, according to the Nationwide, increased by an average of just 3.7% or near half the UK average rate. This illustrates why so many housing market analysts or journalists got UK house prices so badly wrong for 2016, as they mistakenly latched onto London weakness as a sign for an imminent UK housing market bear market, or worse, a Brexit crash. After all, the consensus view was that if London was weak, then the rest of the UK would be suffering far worse. This view was liberally regurgitated across the mainstream fake news press all year. Whilst my comprehensive in-depth analysis of over a year ago concluded that whilst I did expect London house price weakness during 2016, however, this would not impact significantly on average UK house prices, as London during 2016 would effectively pass the UK house prices bull market baton to the regions that I expected would outpace London and thus lift the UK average house prices higher so as to ensure a continuation of a strong UK housing market during 2016. Instead, now, a year behind the curve, mainstream press is coming out with headlines such as "London house prices rise less than UK average for the first time since 2008, as reports The Guardian." And as a reminder, in the run-up to the EU referendum, the establishment Remain camp had peddled a perpetual year-long story that UK house prices would collapse or crash if Brexit happened, as Operation Fear each month ramped up the threats of that which awaited post-Brexit Britain. For instance, George Osborne repeatedly issued doom warnings that likely contributed to his swift sacking by Theresa May. And so the establishment media and institutions such as the IMF and OECD peddled propaganda of expectations for a UK housing market crash right into the referendum voting day if the people of Britain voted for Brexit freedom. Worse still, the clueless mainstream media continued with its UK housing market doom mantra even after the Brexit vote, which illustrates that most of that which is published and broadcast is purely propaganda, rather than that which is derived from methodologies aimed at arriving at that which is the most probable outcome, which is why they missed Brexit and Trump, as these election outcomes were not in the interests of those who own the establishment media. For more on why the mainstream media does not understand the primary drivers of the UK housing bull market, then see my comprehensive UK housing market analysis video in the Implications of Brexit series of 10 videos. UK house prices 5-year forecast update. In terms of the prospects for the UK house prices, it is now 3 full years since excerpted analysis and the concluding 5-year trend forecast from the then forthcoming UK housing market ebook was published, that forecast a 55% rise in average UK house prices, Halifax index, from £174,671 to £270,600 by the end of 2018. The most recent UK average house prices data for December 2016 is showing a 5.6% deviation against the forecast trend trajectory, which, if it continues to persist, then in terms of the long-term trend forecast for a 55% rise in average UK house prices by the end of 2018 would then translate into a 9.4% reduction in the forecast outcome to approximately a plus 46% rise by the end of 2018. And as for house prices momentum, well, in the run-up to Brexit, I expected momentum at the time to slow from 8.7% for a few months after Brexit to 5% before rising again towards 10% by the end of 2016. Whilst what actually transpired was a momentum falling to plus 4% in August before rising to the end of year at 7.2%. So house prices trend turned out to be weaker than expected, which is not surprising given the series of post-Brexit political events that have subsequently transpired, as Britain now awaits Article 50 to be triggered by the end of March 2017. Nevertheless, the trend going into 2017 continues to favour rising UK house prices during 2017. And as for UK house prices forecast for 2017, well, whilst my core forecast is for a 10% annual inflation rate against its current momentum of 7.2%, on top of which we have much Brexit Article 50 uncertainty for 2017, which is manifesting itself in weakening London house prices, including falls for several areas. This leads me to conclude that UK house prices could find it difficult to get back up to anywhere near 10% inflation rate for 2017, and thus the most probable outcome is for UK house prices to end 2017 with a very similar gain to that of 2016, i.e. about 7%. In fact, I would say expect UK house prices to rise by a minimum of 7% for 2017, and I would not be surprised if UK house prices reverted to my trend forecast of 10% by the end of the year. So a minimum of 7% and 10% is possible, which I will come back to as the trend reveals itself during the year. So my minimum forecast of 7% would still be quite a strong increase in house prices, especially when one considers that which the usual suspects that fill the mainstream press are forecasting, i.e. with headlines such as "End of the property, UK house prices to flatline says forecast," as reports The Guardian, that likely will be on the wrong side of the UK house prices bull market for another year. Ensure you're subscribed to this YouTube channel for continuing housing market analysis for the UK and US throughout 2017, as well as other markets such as stocks, gold, and wherever I see a brewing investment opportunities as the Trump reset reveals itself.